It is 2 p.m. in New York. It is 7 p.m. in London. Live from Bloomberg's World Headquarters, this is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Taylor Riggs.
And global stock surge. U.S. benchmarks help push global indices to new record highs. That's amid huge trading volume. Bonds, gold, they tumble, all following the most promising COVID vaccine trial news to date. And there are signs of a breakthrough. New trial results from a COVID-19 vaccine developed by Pfizer and BioNTech showing a 90% effective rate. How this could pave the way for a vaccine by year's end. But there is a new warning from the president-elect. Joe Biden saying the U.S. faces a, quote, dark winter with the coronavirus spreading unabated as he unveils his plans to fight the pandemic. All that and so much more coming up, Romaine.
Yeah, so much more. I guess if you wanted any evidence here of what mattered most to the markets here, it wasn't necessarily the elections. It wasn't necessarily the economy in and of itself. It was really about COVID and how that kind of effect that it was having on the economy. Pretty much the gates wide open here for investors who remain bullish. 3,600 is where we stand right now on the S&P 500, setting us up for a record close here. Everyone participating. You're seeing energy, of course, the outperformer today. The energy index, the energy sector, I should say, up about 15% here on the day. A wild move, of course, in treasuries today, Taylor. Looking at a 10-year yield right now that I guess we can call it, say, flirting with 1% mark. And the Bloomberg Dollar Spot Index, interesting move here. It had been pretty much flat for a good portion of the day. Now taking a little bit of a leg higher.
Well, and this is all, like you said, this rotation that we continue to see under the surface, out of big tech into some of the smaller cap values, into the smaller cap growth. And this is what you're seeing. Remember, we have a pretty big hole to dig ourselves out of, Caroline, as the Russell 2000 value stocks are still lagging by a lot. Some of the big big cap tech, but still trying to close that gap at least today. Underpinning this as well is a big increase in yields that we are seeing. We're now up 13 basis points on the day for the 10-year to a 95. So you were going back the highest in yields, Caroline, that we have seen since March. Again, how much of the rise in yields is good inflation, good growth expectations versus a higher discount rate, maybe bringing down present value of stocks. A lot certainly underneath the surface here.
That is, and big moves on top of them as well. Taylor, great analysis. And Romaine, let's get even more perspective right now. Let's get over to Jonathan Golub. I'm pleased he joins us, Chief U.S. Equity Strategist at Credit Suisse. Wow. The market takes off on this vaccine news first and foremost. What do you make of the moves, Jonathan?
Well, I mean, this is first of all, it's a great day. And I think for those of us who have had to live with this, which is all of us, it's not that our lives are going to change very much over the next 6 months, but it does mean that we have more visibility on where the end of the tunnel is on this. And that's a positive thing. You're seeing really, I think, two stories here. In the near term, this is going to have relatively little impact on corporate profits, but in terms of our perception of corporate risk or risk in general, it's a game changer, which is why the 10-year bond yield is jumping the way it is. And anybody who says maybe this is good news or bad news, a higher 10 yield is good news. That means we have a healthy economy and the banking sector is healthy, and that's positive. We're also seeing the VIX, the volatility index, coming down. That means people are no longer feeling the need to hedge because they don't think the problems are as bad. So, in general, this is very good news for stocks and for all of us.
Yeah, and with regard to the economic issues here, I mean, the general sense here is that obviously with the vaccine, or at least with the confidence that there is some sort of available vaccine or treatment out there, economic activity can get back up to its pre-COVID levels and maybe even soar beyond that, Jonathan. That has to be a net positive, I would think, down the road for corporate profitability.
Yeah, I think that's true, but I think that there was a comment that was made earlier about Joe Biden commented it's going to be a dark winter, and I think that's probably relatively unchanged. We're still facing a spike up in COVID cases. This doesn't really address that at all. There's still the near-term risk that we're going to end up having some real impairment to this Christmas season, and that doesn't change in any meaningful way. But does this improve consumer confidence and business confidence to go and restock inventories and make capital investments and look further out? 100% yes.
And Jonathan, I mean, you're right. A higher 10-year yield is good because that means growth is growing, inflation is growing. How, though, do you think about that in terms of a discount rate and what it means for the present value of these cash flows?
It's a good question. And what people, I think, sometimes miss when they think about that is you don't discount the value of cash flows for a corporation by the 10-year bond yield. You do it on a corporate bond yield. And what you are seeing at the same time as interest rates are rising on treasuries, the spread of above treasuries for high yield bonds and corporate bonds are falling. So the net effect is nowhere near as damaging, or probably not damaging at all when you look at it more holistically.
So is this it, Jonathan? Is value finally off to the races?
It's the question that we've been taking from investors all day long and asking ourselves. When you have a fall in volatility, it helps the companies that are the most vulnerable, and those tend to be value companies. Now we know that we've had a big move in cruise lines and stuff like that, and that's not really, they're not a big part of the S&P 500 or the markets. But if you look at plain old vanilla energy companies and industrial companies and brick and mortar retailers, those names are a big part of the market. And we think that not only, did those have a good day, not like the kind of day a cruise line had, they had a good day, but we think that trend for those stocks is going to continue, and that they have, at the very the least, several weeks or months of continued upside as a result of this.
With regards to, I guess, some of the other asset classes out there, Jonathan, particularly some of those that actually had benefited because of the COVID pandemic, is there a sense here that we'll see a complete unwind of those trades as well?
I don't know if we'll see an unwind, but first of all, we have to start with the fact that the market believed that we were going to get a vaccine. So while this was really good news in the timing, it was really good news on the efficacy, 90%, which is much more than people thought. The market really did believe that we were going to have a vaccine sometime between now and the early part of next year. So I don't think that this is, like something this is not a black swan that came out of nowhere. It's just speeding up a process, but it does help those companies that are most under pressure, and it does help assets that are damaged. Now, with respect to some of those growth darlings that have just been such big beneficiaries, this is really where they're going to have to prove themselves. Can they hold on to those profits?
Yeah, of course, that's the big question of the day. Jonathan, always great to get your insights. That's Jonathan Golub. He's Chief U.S. Equity Strategist over at Credit Suisse. Now, coming up here next on the program, Pfizer shares right now up 10% here on the day. This, of course, after that study of its COVID vaccine found the shot 90% effective. We're going to talk about what this means for the race for the next vaccine. Plus, Biden full speed ahead. The president-elect detailing his plans to contain the virus. We're going to head down to Washington for the latest. And a Brexit endgame? Wow. The UK on the brink of exiting the EU. We're going to get the details on Boris Johnson's final push for a trade deal before that November 15th deadline. All that and more coming up next. This is Bloomberg.
We know that today everything driving these markets is all about hopes of a vaccine. Take a look, Romaine, at shares of Pfizer and its partnership with BioNTech. They're up 10, 15%. Coming out with the vaccine, reporting, I should say, that they have a vaccine that's about 90% effective at preventing COVID-19. Remember, today we have sort of underlined all of this, rising cases here in the U.S., though the death rate continuing to fall to just about 2.3%. So a lot sort of underpinning a lot of this hopes and what a vaccine could mean for this reopening. All
right, for more, let's bring into this conversation Matthew Harrison, head of biotech research over at Morgan Stanley. Matthew, let's start off with this breakthrough, which is not only giving a big boost here to Pfizer, but of course, so a lot of other companies out there that were also right now in development with their own vaccines. How confident are you right now that we are going to see something brought to market successfully in short order?
Yeah, I mean, I think confidence is pretty high. Obviously, the result from Pfizer was well above market expectations in terms of efficacy. We still need to see the detailed safety data, but there's obviously another mRNA vaccine in development from Moderna, and so we would expect those results soon, probably with similar efficacy to Pfizer. And so near term, right, they're going to file with the FDA, and we would think by the end of the year you could have something approved in the U.S.
How optimistic does it make you? But back on the 3rd of November, you were writing a note saying out that at the moment, US COVID cases are worse than your bear model. You were really pointing to the fact that we've got 10 million in the US. We've got potential for shutdowns in local economies. We have Biden talking of a dark winter. Does any of this matter for the here and now?
Unfortunately, while the vaccine is very good news long term for what we can do in terms of turning the case count, in the near term, it's not, right? I mean, Moderna said they'll have 20 million doses by the end of the year. Pfizer said 50 million in their press release this morning. So that's a slim portion of the population that could potentially be vaccinated in the first few months of next year. And so we still expect the winter to be, a difficult season with cases rising.
Matthew, on that note, from the companies that you've been covering in your universe, have they given you any insight into it's not a zero-sum game? You could have multiple vaccines from multiple different companies. How does that get distributed? How do you think about who gets what vaccine when? Are these companies giving you any insight in the race, the horse race of who's out first, what it means for number 2 and number 3?
Sure. Yeah. Look, so there's, I guess at this point, 5 or 6 companies that are in phase 3 clinical studies for their vaccines. What we know so far is the 2 leading ones are obviously Pfizer and Moderna, where we'd expect Moderna data sometime in November. AstraZeneca, who is also among the leading vaccines, has said data potentially sometime in early December. And then you're looking for the next crop of vaccines, you're probably looking at data sometime mid to late first quarter and into the second quarter. So the first 3 is what you're looking at. And I think from a distribution standpoint, the only other piece of information that we know is that both Pfizer and Moderna have said that the first 100 million doses of their vaccines would be available in the first quarter of next year. So most of those doses will go to the US, but that's about, an incremental 100 million people that can be vaccinated.
Well, talk to me about the profit potential here, because I was always under the impression that a lot of vaccines in general weren't really necessarily had wide profit margins on them. And here you have a vaccine, of course, designed for a pandemic where there's going to be a lot of pressure by governments and the public to make this thing either affordable or even free.
Right. So we have very little data points so far on cost in the U.S. The average price per dose that's been paid is somewhere between $20 and $25. That's slightly more than what we pay for flu vaccines, but sort of in the same range of flu vaccines. And then, to give you some idea, the operating margin on flu vaccines is somewhere, around 50% or a little bit less. So we don't know the details here yet. We don't even know details on cost of goods from many of these companies, but if you look at flu vaccines, that gives you some idea.
Matthew Harrison, we thank you for all the perspective and all the notes, of course. Head of Biotech Research at Morgan Stanley. Great to have some time with you. Now coming up, Biden presses ahead towards the presidency. We'll discuss what we can expect from the incoming administration and get the latest on the current White House next. This is Bloomberg.
Outside news of a vaccine from Pfizer, the market's also digesting some results, of course, we got over the weekend as it relates to the election. Our map, we're following AP standards, shows 290 to 214 as Biden, of course, was the president-elect, and that was announced over the weekend. For more on our election coverage, I want to bring in our Bloomberg White House correspondent, Josh Wingrove. Josh, let's start from the Trump campaign's perspective. What now are they doing from a legal perspective? How much clout, how much weight does that have in stopping the momentum of Biden?
Not a lot in terms of what weight it has, but as for what they're doing, it depends on who you ask and what day you ask it. They have been largely radio silent for 48 hours. We've been banging down the door trying to figure out what legal challenges they will file and when. They simply won't say, they haven't said. So it's unclear whether they're going to go forward with what they said on Saturday or whether they're rethinking it and if they think this thing is in fact baked. I think the most likely scenario might be kind of a middle path where they do launch some challenges to be able to say that they defended the integrity of the vote or what have you. but begin conceding the process and starting the formal transition. I mean, for them to reverse the result, in other words, get him declared as the winner, they'd have to, overturn or invalidate thousands or tens of thousands of votes in not one, but, 3 or maybe even 4 states. So it's a tall order. It's a long shot. This is why I think you're not seeing very many Republicans come out and say that this is a great idea. But they seem to be sort of boxing out time for the president to kind of get to that conclusion on his own.
Yeah, okay, well, they're boxing out time. There's only really a couple of months, I guess, before we get to the stage where, the Constitution requires us to have a president in place one way or the other. Biden has been out there basically making his case for, I guess, what his new administration will be and what it will focus on. Is that going to be impeded by the fact that the Trump campaign has yet to concede?
It could be. One of the things right now is an open question is whether the GSA in government is slow walking the transition, the formal thing where they let Biden's folks in to essentially look under the hood. If they do that, this week or next, as opposed to a month from now, that would be a sizable difference. But Biden is leaning on the virus in particular. He gave a big speech on it today. He unveiled his task force. Frankly, a lot of what Biden can do on the virus is rhetorical anyway. It's encouraging people to wear masks. It's trying to get, the politics out of it. So maybe Republican governors, for instance, would be okay with encouraging their folks to wear a mask. So he can do that even though he hasn't taken power yet. So I think we're going to see him try to straddle the line, proceed so that they can try to hit the ground running on day one, both on the virus and on everything else they want to try and do. Even if they don't, probably won't have the Senate, while also trying to start sort of seizing the title of president-elect and depoliticizing this virus, which right now is worse than it's ever been. And every medical expert will tell you it's going to get worse, even worse, the next month or two.
Yeah, certainly. We already see some of the new lockdowns coming into place in New Jersey, or indeed the slowing down of the reopening. Josh, you mentioned the Senate there. What then of the Senate races, and any clarity there?
Yeah, we're heading to these 2 Senate runoffs in Georgia. Kind of depends on who you ask. My 2 cents is that you have to think that Republican incumbents would be favored because Republicans tend to do better in these kinds of elections. It's possible the Democrats could make this a referendum on, Biden's mandate or whatever, but it feels like Republicans have the inside track to hold the Senate majority. And of course, that will be an issue for Joe Biden. He will be the first president in a generation to take power without having both houses of Congress, or a majority in both houses of Congress. It will limit what he's able to do. It will limit his ability to pass a COVID relief bill, for instance. It will frustrate him and probably exacerbate fractures within the Democratic Party.
Yeah, a long road ahead for the Biden administration. Josh Wingrove, of course, keeping an eye on everything going on in Washington. All right, let's get over now. Taylor with the Business Flash headlines.
Thanks, Romaine. We're going to stick with some of this election news and start with Joe Biden's election. Well, it could throw a wrench into a White House-backed plan to free mortgage giants Fannie Mae and Freddie Mac from government control. The government, as you remember, took over during the 2008 financial crisis. Now the Trump administration, they have about 2.5 months to lock in any changes they can to Fannie, Freddie, and the nation's housing finance system. And Romaine, you've been all over this story. Shares of Biogen, they're plunging today. An FDA advisory panel found that data from a single clinical trial of the company's Alzheimer's therapy was not enough to show that it works. One analyst wrote that the findings were a disaster for Biogen. 3 firms have slashed their ratings on the stock. And airline stocks are soaring today, all in the wake of that Pfizer vaccine announcement. The parent of British Airways, it was up almost 40%. U.S. carriers, American, Delta, also rose by double-digit percentages. And you guys, we're going to stay on this theme because not only are you seeing sort of this risk on trade within the equity markets, I see it too within the credit markets. Take a look at this measure of risk within the high yield market, CDX pricing falling all the way back to lows that we haven't seen since early 2020, March 2020. So really pricing and risk of credit really coming down. Any hopes of a default by this measure really coming off the highs, Romaine.
Yeah, and we're going to talk a lot about, of course, what's going on in the equity markets and this idea of the rotation to some of those value names. You see that in the outperformance today of the small caps versus the large caps. The NASDAQ 100 right now actually in the red on the day, while you have the Russell 2000 up more than 4%. This is the biggest outperformance that we've seen between the small caps and these large big cap tech names in quite some time. Of course, a lot of that is because, of course, a lot of those small cap names, guys, were, of course, the most beaten down names. You mentioned mentioned the airlines, but of course, you got names like AMC, the movie theater chain, up 58% on this day. And of course, a lot of those restaurant names are rallying pretty hard on this day right now.
And to the flip side of that, let's look at what's on the losing side of this trade. It is the big winners of 2020. I shine a light on one of them, Zoom, of course. Zoom Video down some 14% over a course of a 2-day move. It's one of the big losers on the NASDAQ 100 that you were just talking about, Romaine. Also, what else is losing? Your favorite, Romaine, Pool Corp.
What?
Down 13%.
13%?
Are we not going to need to
We just stopped buying pools all of a sudden because COVID's over?
I thought it was a beautiful weekend.
Too cold. It's winter.
It's been boiling here. I don't know what's going on.
People still want to swim. Let us swim.
Let us swim. Let us buy our masks on Etsy too, but still Etsy off by some 13% as well. Let's get to the rest of the market because...
They sell more than masks.
They do. They do. Credit to Etsy where credit is due, but they do make some cute masks. Meanwhile, NASDAQ currently flat. All country world index, guys, this is a risk-on move worldwide, and the money, it comes well out of the Japanese yen and those havens. This is Bloomberg.
This is Bloomberg Markets to Close. I'm Romaine Bostick.
I'm Caroline Hyde.
And I'm Taylor Riggs.
A little after 2:30 here in New York, getting settlement right now of NYMEX crude futures, settling in right above $40 a barrel. Of course, getting caught in the upswing of the general positive feelings here with regards to that COVID vaccine and what it could mean, particularly for the resurgence of the economy here. Gasoline following that lead. In fact, crack spreads, your 3-2-1 crack spread at one point today was all the way up to about 9.30. So a sense here that people are going to get back out there, back in their cars, back to driving. You're seeing gold break below a couple of the key technical levels here, and copper really all over the map. It had surged earlier in the session, but ended up closing down for the day.
You know, Romaine, despite the vaccine news that we're getting, the election news that we're getting, in the middle of all of these markets, we're getting tariff news as well. Come and take a look at this. We've been looking at the EU looking to trigger about $4 billion of tariffs on U.S. goods. The EU, of course, going to be targeting various Boeing models, spirits, nuts, tractors, video games, a lot going on within the world of tariffs. So for more on this, to break it down for us, let's bring in Bloomberg's Maria Tadeo. Maria, what do we know about tariffs, of course, that the EU looking to implement tomorrow?
Well, look, this is a story that's been in the making now for months, and we knew this was going to happen, that ultimately WTO would rule in favor of the European Union and that they would go ahead with the tariffs. The reality is the European Union does not want to really trigger more tariffs on the United States. They would love for the U.S. to say, I cancel my Boeing tariffs and you pull out your Airbus tariffs, and we go back to normal and perhaps have a more normal relationship when it comes to trade. So in reality, this sounds like very tough action from the European Union. It sounds like retaliation, but they would really love to just cut a deal and kind of go back to normal trade. What you have to factor here is that the Europeans are also factoring here, picturing that the U.S. is in a moment of transition. We know that President Trump is on his way out, that Biden perhaps is going to have a different take on when it comes to multilateral trade, and they're looking forward to that. So, I would say on the surface, this looks or would seem like it's another step in that retaliation, more difficult trade relationships, but overall, the EU cannot wait to jump into the next phase in which you have a different U.S. administration that is not going to do politics by tweets and is not going to use tariffs as a negotiating tool, perhaps going, again, as I mentioned, to a more normal relationship.
Maybe then we see a new relationship between the EU and the US. What about the relationship between the EU and the UK? Finally, we can talk about Brexit once again as everyone else rolls their eyes. But talk to us about November the 15th and the deadline that's creeping up on us.
Yeah, look, this is an interesting one because you would think they're not really connected, the U.S. election and Brexit, but in reality, the context does matter. For the UK, you could argue that Biden winning this election makes a deal, perhaps, or the need for a deal more likely. Before this, President Trump was very pro-Brexit. We all know he was a fan of Brexit, that he believed the UK would do better outside of the European Union, and he promised the UK government this quick, huge trade deal. Under Biden, that is probably not going to be the case. We've heard repeatedly that the Good Friday Agreement needs to be respected, that the Irish government cannot be threatened by the UK, and that anything that breaks international law is problematic for the Biden camp. So, of course, the context really matters. And you could argue that given the situation, the economic slowdown, the coronavirus, now the fact that the context in the U.S., in the EU too, is changing, this could push the prime minister to get a deal. What I would say is that it's also very remarkable just how much the tone has shifted during this weekend. You know, the prime minister has kept repeating, you know, a deal, I'm not going to take it at any cost. The EU is not negotiating in good faith. This Saturday, just after Biden was confirmed president-elect, he had a call with Ursula von der Leyen of the European Union and then changed message to say, we do want to get a deal. It's good for both sides. Whether this is just a coincidence, I leave it up to you, but the context really does matter.
Changing of tone. The context also being that I think it's Biden's great-great-great-grandfather came from Ireland, of course, a European nation. Bloomberg's Maria Tadeo reporting, as always, from Brussels. Stay well, Maria. We thank you for joining us. Now, coming up, we're going to be talking Valero Energy on a tear. Shares up over 30% today, on track for their biggest gain since 1997. Why is it leading the rally in the S&P 500 energy stocks? Stock of the hour comes next. This is Bloomberg.
All right, time now for our top calls. A look at some of the movers on the back of analyst recommendations. First up, Biogen plunging today after the U.S. FDA panel on Friday voted against the company's experimental Alzheimer's therapy, dimming prospects for final approval. Bank of America downgrading the stock to underperform with a $240 price target right now. The analysts citing significant political fallout from that negative panel vote. You can see shares here right now down about 28% here on the day. Next up, C.H. Robinson, the big logistics company, upgraded to buy from neutral over at Citigroup with a 118 target. The analysts saying credible opportunity for EPS growth in 2021 as the trucking cycle starts to strengthen. Shares here up 4.5%. And finally, let's take a look at Yelp. Upgraded to neutral from sell over at UBS with a $26 price target. The analysts saying that the company's end demand environment actually improving here, and it's giving management a pat on the back here for executing on some of those cost controls. Shares of Yelp on the day up 19%. And those are some of your top calls. Taylor?
Thanks, Romaine. Now let's get a quick check on some of the business flash headlines and what is making news. And China's decision to halt Ant Group's record IPO could be an expensive one for the fintech giant. According to estimates from Morningstar and other firms, new regulations could reduce Ant's valuation by up to $140 billion. That's roughly half of what it was before last week's action. Beijing wants Ant to raise more capital to support its lending. And the latest round in the video game console fight between Sony and Microsoft kicks off this week. Microsoft is launching its new Xbox, while Sony comes out with the latest PlayStation. Microsoft is making a serious attempt to attract fans in Japan. Meanwhile, Sony's built the U.S. into its largest single market. And Warren Buffett going all in on his own stock. Berkshire Hathaway spent $16 billion buying back its own stock in the first 9 months of 2020. That's more than triple its previous annual record. Buffett has been looking for a so-called elephant-sized deal to put huge sums of capital to work, but he hasn't been able to find large acquisitions in recent years. Caroline, those were something, of course, that also came out on Saturday.
Quite a lot came out on Saturday, hey? Meanwhile, let's get over for what's happening right here, right now. Stock of the hour energy share, of course, of the S&P 500 has shrunk to just 2%. But good news on Pfizer's COVID vaccine has lifted the sector today. Valero is leading the pack. Bloomberg's Dave Wilson, a 31% climb. Talk us through it, Dave.
And we're talking about the biggest gain for this company, potentially, assuming it holds up, since it was spun off from PSE&G. Yeah, that's right, the California utility back in 1997. That's certainly a move that gets your attention. And Valero has struggled like a whole lot of energy companies have struggled. You know, the company had losses in the second and third quarters. Their revenue way down from what it was. In the third quarter, they made a little more than $4 a barrel on each barrel of oil that they, refined into gasoline, heating oil, and all the rest. I mean, that was the lowest margin in more than a decade. So this is a company that's been hurting, as along with the energy industry more broadly. We've seen people don't drive, people don't fly the way that they did before the coronavirus hit. We've seen economic activity slow down. So, who needs oil for petrochemicals or whatever? I mean, it's been an issue across the industry, no question. In Valero's case, I mean, we saw the shares down as much as 67% through mid-March. They made up most of the loss by June, and then they've been coming back down again. In fact, through Friday, Valero was down 59%, a bit more than the S&P 500 Energy Index, which is saying something considering how things kind of played out. And like I say, this is a company that, because they're selling gasoline and heating oil, would benefit directly from what consumers are doing. So, if we see more activity, that's going to be a plus for the company, and they really are at the forefront of the gains we're seeing in the S&P 500 Energy Index today.
Absolutely, up 31% here. Biggest move of the day of all time here for Valero. Dave Wilson there with our stock of the hour. Now coming up here next, remember that company that sent out an email to all 10 million of its customers saying vote for Biden? CEO Dave Barrett, CEO of that company, Expensify. He sat down with Scarlet Fu. We're going to show you what he had to say. That's coming up next. This is Bloomberg.
Time now for Bloomberg Equality, where we examine the bottom line impact of diversity. Our focus this week, corporate activism. Bloomberg's Scarlet Fu is here with more.
Thanks, Caroline. Corporate activism got a new poster child about 3 weeks ago when Expensify founder and CEO David Barrett emailed all 10 million of his software company's users. He urged them to vote, saying, quote, anything less than a vote for Joe Biden is a vote against democracy. I spoke with David about this and started by asking who he involved in the process of making this decision. And he said, everyone.
We're about 130 employees, and we had an open discussion involving the entire company. The newsletter draft itself was shared with everyone, and everyone took turns, editing it, fact-checking it, and things like this. And so we have a variety of internal processes that facilitate these kinds of complicated discussions, because if you're going to have a diverse organization, diversity means a wide variety of opinions. And if you aren't getting a wide variety of opinions, and if you don't have processes to kind of manage those constructively, your environment probably isn't very diverse. And so as a diverse and inclusive environment, we try to celebrate a wide diversity of opinions, but also not be paralyzed by those opinions by demanding perfect consensus to everything.
So you mentioned you have 130 employees. I wonder, particularly the younger ones, what kind of expectations do they place on you, on the company overall, to take a stand on societal issues? And, keeping in mind that this isn't Expensify's first attempt or effort in involving itself in social issues.
That's interesting. I wouldn't say that there's like an age bias there. I can't say that this was like a response to our the millennials or something like this. This is something that cuts across the entire demographic of our company. I think everyone feels compelled to do more than just expense reports. It's easy to say, it's like, oh, we're an expense reporting company. What can we do? But our attitude is, we're an expense reporting company. What can we do? What tools do we have at our disposal to actually influence this important issue? And so we've all basically agreed we can do more than just technology. We can do more than just make money. We can try to make the world a better place.
What kind of blowback did you anticipate before sending out this email? And how many customers were you mentally prepared to lose over this?
Sure. Well, I guess I would start off to say, of the millions of users that we wrote, about 0.5% actually wrote in with any comment, positive or negative. And so first, I don't think we should exaggerate kind of the amount of resonance that this message had in the first place. I think it's easy when, at a certain scale, everything you do generates thousands of responses, but thousands of responses could actually just mean kind of nothing at the end of the day. And so, so first, I would say most of our customers didn't really react in any way whatsoever. Second,
was that a disappointment that most people didn't react?
Maybe, yeah. I mean, I guess I would say, it's hard. It's very easy to tune out something as big as the dismantling of democracy before your very eyes. It's hard to get people to notice, and that's why we were doing this, is to try to get people to notice. And so I think that I'm very happy with the the coverage and the discussions that have come out of this, but honestly, I want more. I think we need more engagement going forward, not less. And so first, I would say most of our customers didn't engage in the first place. Second, of those users who wrote in, 90% weren't paying customers in the first place. Then when you go on Twitter and you kind of dive into the reactions, it's like the vast majority of Twitter is not a paying customer in the first place either. Most aren't even users. They're just kind of hangers on to looking at, like, retweeting someone else's mention. So I think it's a real tough thing to try to infer business impact based upon these sort of external signals. I would say we didn't go into this desiring or avoiding any particular business impact. We knew it was going to be largely impossible to measure and probably going to be insignificant. But that wasn't really the point. The point was to do something to try to make the world a better place and get this message out that democracy is under attack, and it's on us as citizens to do something about it.
And I'm sure that message resonated with a lot of people and also potential new customers. I wonder if you gained any new customers, whether they're paying or otherwise.
I would say we definitely saw a huge uptick in interest in the website, but the most interesting thing was a tremendous upside to job applicants. So we have a team page called we.r.expensify.com, and we saw skyrocketing attention to that, and lots of applicants specifically mentioning, I'm applying for this particular reason. So I don't know that it had a huge impact upon the business from a revenue or customer perspective, but it has certainly had a huge impact from a recruiting perspective.
One thing about Expensify is that it's based in Portland, Oregon. And of course, that's been a hotbed of protests since the spring and the summer and even this fall. How do you think that influenced your decision-making on this?
Well, it certainly did. Now, I would say we're not really based anywhere. No, we have offices in San Francisco, Portland, Michigan, New York, London, Melbourne. So we've got people all over the world, and none of them have.
But you're in Portland right now, yes?
I'm personally in Portland. Yeah, that's right. And so I'd say certainly the experience engaging on the ground with protest organizers and the BLM movement has really matured this organization, because it's easy to have a knee-jerk reaction to basically any social movement, like, oh, it's obviously good, or it's obviously bad, or whatever it is. Once you start getting involved for real, nothing is obvious. Everyone is complicated. And I think that sort of complexity has led us up to this, realizing it's like there is no simple way to view this matter. There is no one perspective that everyone's going to agree on.
David Barrett, and one thing he mentioned is he didn't discuss this ahead of time with their investors. The company is profitable, so it's not in fundraising mode, and therefore doesn't really need to think about how it plays in the VC community. Romaine?
All right, Scarlett, a great interview there. We want to get back now to what's going on in the markets here in the U.S. S&P 500, of course, reclaiming that record high that it set back in September. The Dow Jones Industrial Average at one point reclaiming its high set back in February, and even the Russell 2000 at one point reclaiming its high set all the way back in 2018. Here to kind of explain whether we should be happy about this, cautious. Let's bring in Cameron Christ. Of course, he writes our popular Macro Man column here on the Bloomberg terminal as our Bloomberg macro strategist. Cameron, there's a lot here to be positive about. Are we getting a little too far ahead of ourselves today with some of these gains, though?
I mean, quite possibly. I mean, clearly the scientific breakthrough, the apparent scientific breakthrough is good news. And in the fullness of time, that could potentially imply a return to normalcy, not only through the application of the Pfizer vaccine, but also the potential for other vaccines that are in the pipeline from other makers, other drug makers that use a similar methodology. So all that is certainly good news and room for optimism. That being said, it's unrealistic to think it's going to have an impact in the very near term, because there's still some hoops to jump over or jump through to make sure that this thing is safe. And then there's the just logistical issue of being able to manufacture sufficient dosages to inoculate large swathes of people. And in the case of the Pfizer vaccine in particular, it needs to be kept at very, very low temperatures, which presents another logistical challenge. In the meantime, obviously, COVID is rearing its ugly head again, and there's the sort of growing potential for near-term increase in sort of lockdowns or economic restrictions. So it's kind of a tough issue to adequately discount today, because in the very long term, it is fantastic news, but it doesn't necessarily change anything in the short run. So how do you adjust the net present value of financial assets today for something that won't help
the immediate sort of train in the tunnel that's bearing down on us, but certainly offers a quite brilliant beacon of hope at the end of the tunnel.
Do you think big cap tech stocks, as we perhaps become more realistic about whether or not it helps the near and now, as we start to digest the number of COVID cases, I mean, for one example, right here in New York and New Jersey, do you think big cap tech will become the haven trade once again and people just locking in profits right now?
Oh, hold on, let's just make one thing clear. Big cap tech has never been any sort of safe haven. The NASDAQ trades on whatever it trades on, a 30 vol. You don't put your money in a 30 vol product to protect capital. So let's be very clear about that. It's gone up during the COVID era because many of these companies are relatively immune to the cyclical impact of the pandemic, and in some cases have actively benefited from it. But in terms of from purely financial perspectives, that was investors playing offense, not defense, which is an important psychological distinction there. I think it's certainly safe to say that many of these companies are very richly valued. And insofar as one can then posit that there is a world that we can envisage in the not too distant future where these firms won't sort of enjoy a captive audience of people essentially working from home or locked down or whatever, then that's when the reality of the valuation argument starts to bite. And, as a sort of a shorthand, people are pricing sort of small caps as the beneficiaries of stimulus, whether that stimulus comes from government spending or from an eventual full reopening of the economy, and the large cap tech firms as the beneficiary of the status quo. So clearly what we've seen today is, insofar as a reopening caused by a vaccine is by very, very definition stimulative to economic.
I'm going to have to leave it there. Cameron Christ, this is Bloomberg. We're counting down to the close. Just 1 hour left in trading. I'm Caroline Hyde.
Stocks right now near their highs of the day. The S&P at a record high. Dow Jones also at a record high. I'm Romaine Bostick.
And I'm Taylor Riggs. It's all about the rotation, you guys. Growth to value, big to small. It is underway. And with just 57 minutes left in the trading session, we talk about those record highs you continue to see on the S&P 500. If we can briefly pull up the IMAP function, I can walk you through the individual sectors of the S&P 500 where you really see that rotation underway from growth into value. Some of the more cyclical sectors really underway here, as a lot of those companies that really benefit from higher yields from some of that cyclical big recovery that we see here within the U.S. are some of the big outperformers. And I want to talk also about the rotation that we continue to see into small caps. The Russell 2000 remains so important because this was the only index that had not made a record high in this last year. The last record high, 1740 in 2018. We had gotten there earlier this morning on a closing basis. Not sure we're going to quite get it, but this day's pop, this rotation back into the small caps remains something very, very important.
Yeah, absolutely. That's something we're going to keep an eye on here today, and I'm sure we're going to be talking about it for the next few days here. Look, I mean, the market reaction that we saw today is proof positive here that probably the best economic stimulus you can have right now is some sort of vaccine or treatment for COVID. However, you take a look at what's been happening here, the trend line. Karina Mitchell just mentioned this here. Of course, we hit that, 10 million milestone here in the U.S., 10 million Americans diagnosed with COVID-19. But what you're looking at on this chart, these are the daily cases here, topping 100,000. We've had so many sequential daily records now over the past few days. And again, heading into the winter, the colder months where there is some concern here that we would see an increase in the cases from this base level gives a lot more importance here, Caroline, to having some sort of treatment for the vaccine.
Why Biden calls it a very dark winter that we're approaching, why New Jersey Governor Phil Murphy is having to backtrack on some of the openings of indoor dining, for example. Nevertheless, credit where credit is due. There is optimism surrounding this vaccine. Dr. Anthony Fauci himself, of course, the U.S. government's top infectious disease expert, he'd said that the results suggesting 90% effectiveness are just extraordinary. He also went on to say, look, it's going to have a major impact on everything we do with respects to COVID, because this doesn't just be good news for Pfizer and, of course, BioNTech, but it's also good news in terms of Moderna. Similar results potentially coming for that particular company, as it's also basing its vaccine on mRNA technology. So we have a hope. We have a prayer, but Romaine, you're right, it's not yet in the here and now.
Yeah, optimism today. We'll see if this lasts. For more insight on this, let's bring in Mark Smith. He's financial advisor and senior portfolio manager over at UBS. Mark, great to have you on today. Let's start off here, of course, with the news of the day, this Pfizer vaccine. And I guess the idea here that should this vaccine make it to market, and we all take it, that this will provide some confidence for all of us to get out of the house, go back to work, go back to play, and give this economy a boost.
Yeah, I mean, when I talk to my clients every day, they're seeming more and more optimistic. They're happy about a number of things. One, the election that just happened. We have a new president-elect, according to the numbers, and the blue wave didn't happen. So why is that so important? It's important because now you have to have compromise, and it's going to be, I think, a moderate stimulus approach compared to this huge, robust package in the $3 to $4 trillion range that was being mentioned before if there was a blue wave. And so, I think the street has a lot of optimism that taxes aren't going to go crazy. Regulation may not be as crazy as once thought if you had a blue wave and as restrictive. And so this is why you're having all this optimism. But I'm also hearing on the other side, I'm still at home with my kid on Zoom and I'm not going in the office. So with all that optimism is reality. And so that's what I'm going back and forth with my clients even today.
There's also the reality, of course, Mark, that we don't yet know the election result when it comes to the Senate. How certain are the people you speak to, the clients or the advice that you're giving, that there isn't going to be more of a move towards the Democrat Party in Senate?
Well, it's simply because we think that even if it's, a 50-50 split, that you're going to have to work with both sides of the aisle in order to get legislation across the finish line. I don't think that the vice president is going to be going in and breaking the tie every single time there's something that needs to be had. So you're going to have to work with both parties in this environment. And with the White House possibly being not a point of news every single day, people are very excited about that. That we can focus on what matters, which is earnings and how companies are making money for us in the market. And so that's what I think a lot of folks are excited about and why the market's doing so well today.
Mark, folks are not excited about the 10-year yield, at least if you're a bondholder, with yields up 14 basis points now to 96 basis points. How are you thinking now about perhaps a new range for the 10-year, or is this a blip and we go back to range bound in 50, 60, 70 basis points?
That's a great question. And so, what a lot of clients are doing is buying gold because they don't know the answer to that question that you just asked, because it's kind of diversifying everything that could happen with the treasury yields. And so we're telling our clients, and by the way, most investment banks and wealth management firms are saying the same thing, to have a slight overweight in gold and having it be a part of your portfolio. Those that I know it's having a pullback today, but could be potentially a great time to buy.
Talk about the balance here in this reflation trade, assuming that this is going to be long-lasting. There is a sense here that, of course, seeing yields go back up, that is a positive because it is a reflection, of course, of a strengthening economy. Of course, once you start talking about inflation, you have to start talking about the Fed. You have to start talking about, I guess, the potential that we could see that increase in rates actually work against some of those asset classes out there.
Yeah, and I think that's a great point. I mean, if rates stay where they are, like the Fed just said last week, that's indicating that we don't have as strong as an economy as everyone's saying. And so we're very cognizant looking at where rates are going. But given how the Fed has reacted and saying that they're going to continue to have liquidity in the markets, that's going to drive everything up from buying homes to investing in businesses. Because money's so cheap. And so that is, we think, a great thing for the overall economy and for our clients when they're looking to do future investments in this environment.
Upbeat Mark Smith, we thank you for your time, sir, and giving us some time amid all the phone calls I'm sure you're fielding. Financial advisor and senior portfolio manager over at UBS. Now, let's have a quick look at what's coming up. Wall Street turning its focus to business under Biden administration, as Mark was just saying, checked by a divided Congress. Carlyle's David Rubenstein provides a post-election market prognosis for us. Plus, another round of restrictions in the Garden State. With cases rising in New Jersey, Governor Phil Murphy cracks down on bars and restaurants. And investors are loving it. McDonald's surpassing third-quarter sales expectations as the pandemic gives drive-through and delivery a lift. We'll dig into those numbers. This is Bloomberg.
All right, welcome back to Bloomberg Markets to Close. We are counting you down to the close, 48 minutes to go here, and stocks decidedly in a positive mood today. You take a look at the S&P 500, 3,600 right now, a little bit off the highs of the day, but that's going to be good enough for a record high as we head into the close. It's energy names really leading this chart here. You take a look at your 10-year yield. You had a 14 basis point jump in those yields. That's giving a big lift to financials. The S&P 500 financial index right now up about 9% here on the day. And Russell 2000, we're going to talk about this a lot. A lot of these small cap names rallying hard. Of course, the most beaten down names during this COVID crisis were a lot of those services companies that are in that index. They're all up today. The Caesars Entertainment up double digits. Marriott, the hotel chain, up double digits. You talk about Cinemark up 55% here on the day, the movie theater chain, and a lot of those restaurant chains, the Dine Brands, the Texas Roadhouses, and of course, Caroline's favorite Denny's, all up strongly here on the day as we head to the close.
And Romaine, what goes up sometimes also goes down. In this case, New Jersey, they just had their debt downgraded one notch by Standard & Poor's to BBB+. On top of that, they've seen more than 250,000 COVID infections since the outbreak start. Governor Phil Murphy has warned now that tougher restrictions may be coming. He spoke to Bloomberg about fighting the virus and how a Biden presidency might change that.
In tone and in substance, it's a dramatic change. The words matter. You need action to back those words up, but responsible leadership, finding common ground within our country first and foremost, and then with our allies around the world, and the sort of mindset associated with that, I think that's going to be a huge change. And then I think in substance, you're going to have a national, consistent national effort as it relates to the pandemic, which we desperately need. I think we'll shift from a lot of talk about infrastructure investment to actually infrastructure renaissance. That would be a huge for New Jersey, which is smack in the middle of the Northeast corridor, with a lot of our residents that commute. That's a huge deal for us. Pandemic, we've been crushed. Obviously, that's a game changer. And I think thirdly, economic stimulus, smart, big stimulus at all levels of the economy. And I think we'll see all three of those.
So as you say, Governor, the tone matters, words matter, but you need the action too. Let's talk about those actions you just referred to. Let's start with COVID-19. It's spiking back up all around the country, all around the world, particularly in Europe, but specifically in New Jersey now. Last time I checked, you're up over 2,000 new cases a day.
Yep.
Big spike up. Do you have a sense of what's causing that? What needs to be done to remedy it?
Yeah, today, David, another day with over 2,000 positive cases. You're absolutely right. We've been in four digits for now weeks. And we, as you know, you and I talked way back when we were crushed. We crushed the curve, and now it's come back up. We think a lot of this is fatigue, including in private settings. I was on with Tony Fauci yesterday, picking his brain and getting his advice. And when I described our situation, he said it's basically that around the country. We'll probably take some steps tomorrow to tweak our parameters at the edges, but I will tell you, the big plea is to not let your hair down. That's exactly what this virus wants us to do, including when you're at your house with your own family. It's hard for us to find a huge set of outbreaks in schools or restaurants or gyms. It's really overwhelmingly private settings.
President-elect Biden has really emphasized COVID-19 and the response to COVID-19 throughout. When they take office, when you have a Biden administration, how's that going to help you? I'll take an example in Passaic County or Essex County. What's it going to do for you?
Yeah, I think you're going to see a national response, David, and that will include, we're already building an enormous stockpile. My guess is that'll be an extra boost, whether it's PPE or ventilators. Healthcare workers will be a challenge if we are in a national fight, which we are right now. In the spring, remember, we got healthcare workers coming into New Jersey from elsewhere because they weren't hit. That's unlikely to happen now. So we need a national lift there. We need that economic stimulus, which has an impact on public health, plussing up more testing, getting that vaccine over the goal line and then equitably and properly distributed. Those are some of the areas where you can make a big difference, not just at the national level, but that drives right down into our communities.
New Jersey Governor there, Phil Murphy, with our own David Weston. Now, time out now for Options Insight with Abigail Doolittle, where you're going to be looking at today's rally, of course, and whether it can last, though.
To dissect that with me, Caroline, is Scott Bowers, CEO of Prosper Trading Academy. And Scott, happy Monday to you, and those who are long stocks are really enjoying this day. But it's another day of the haves and have-nots, only in reverse. Right now we have the S&P 500, the Russell 2000 at record highs, surging, but the NASDAQ 100 down about 0.6%. That New York FANG index at one point down 2%. What do you think is ahead? Have we gone too far, too fast in both directions here?
Yeah, I really think so. And then you look at the small caps, you know, the Russell and IWM, they're up 5-6%. And that's the area that I'm really focusing in on, because that has made an incredible comeback, more so than the other indices, the small caps. And it's great, and this news is fantastic. But, you know, just like you said, Abigail, I think it's too far, too quickly here. And I wouldn't be surprised to see a pullback, you know, in the IWM area to back to about 162 or so, which equates to the Russell right around maybe 1675 to 1680 area, just based on how quickly we popped up here. There'll be some big support in both of those areas in the small cap space.
That's pretty interesting, because that would almost suggest that today's gaps higher on all of these different indexes and the correlating ETFs, instead of being bullish breakaway gaps, could in fact turn out to be the sort of gaps that will at some point fill to the downside. I guess we'll know more, and perhaps also suggest that the ranges that we're seeing breakouts from, that it could be a false initial reaction. Stay tuned possibly for more volatility. How do you play this through the IDM and options?
So in the IWM, the small cap ETF, I'm going out a full month and change, out to December 18th expiration, and I'm buying the 170, 160 put spread, $10 wide, pay about $2.5, $2.75 for that. And again, I'm not looking for the apocalypse now. What I'm trying to do is be rational and say, okay, this is great news about the vaccine, but it's not going to happen so quickly, and we are in this second wave right now. So I think a pullback is warranted.
Okay, so let's now take a look at the stay-at-home trade, which today is really under tremendous pressure. You have your Amazons, your Netflixes, your Facebooks off. Also, Peloton. Peloton is down sharply. You think that this, too, is a reversal. But earlier, I understand you were bearish.
Well, no, earlier today we were selling some put spreads down when it was trading towards its low, like around 96, 97. We were selling put spreads. The stock has rallied back, and I'm even more bullish right now. And so now we're putting out, trying to buy some call spreads, again going out to December 18th, buying the 115, 125 call spread, paying about $2, $2.25 for that. Listen, again, we all hope that we get this vaccine sooner rather than later, but the brand name stay-at-home stocks, like a Peloton, it's not going anywhere. Fundamentally, yeah, it's very expensive, right? When you look at PE ratios and all that, it's very expensive. But the news they came out with last week with their earnings was phenomenal. They're way further ahead than they thought they would be.
Well, it sounds like you think that we're going to see a reversion to the mean. Scott Bowers, CEO of Prosper Trading Academy, thanks for joining us for Options Insight. And from New York, this is Bloomberg.
The vaccine news, you guys, this morning really making us rethink where the consumer is positioned at this moment. Look at the reopening stocks like airlines, cruise lines, even brick and mortar shops. Those are really jumping. McDonald's, though, now to the downside. I mean, people really wanted comfort food during the pandemic. They're doing more drive-thrus and delivery. But how does McDonald's now start to transition if we are beginning to think about reopening the economy? For more now, we're joined by Bloomberg's Anne Riley Moffitt, my first boss here at Bloomberg, so we'll all be nice to you. And talk to us first here about the shift that we've been seeing today in the consumer trying to go out, trying to reopen versus some of these more stay-at-home stocks like a McDonald's and the comfort food?
Sure, absolutely. Well, this news today that we might be nearing a vaccine, even if we're still several steps away, sent a lot of shares surging. Anything related to travel, anything related to leaving your house, going to movie theaters, even going to restaurants. At least many restaurants really spiked. While these at-home stocks like Peloton bikes, all those shares came down today. And McDonald's is an interesting place. Shares were down, about 1% last I looked, which is not a huge sell-off. Certainly, they have benefited from the pandemic. They have a huge drive-through business, especially in the U.S., and all this comfort food, as you mentioned. So they have done very well, and the question is how they maintain that once all of their rival restaurants with sit-down dining rooms really start to reopen. I think that's some of the plan they tried to lay out for investors today.
Yeah. I think that's interesting. I don't know if they're going to try to do it with the chicken sandwich, but you think about a lot of these sit-down restaurants that are rallying hard today. Your Dave & Buster's, your Denny's, your Red Robin's, companies that didn't really seem to have much of a takeout or delivery business model prior to COVID-19. Do you think the trend line is going to swing back enough for some of those restaurant chains to really survive here as we get a little bit deeper into this year and next year?
Yeah, it's a good question. I think consumers have become very used to takeout and delivery and drive-through. And yes, there might be some fun times that it's nice to sit down and order from a menu again. But, there's some thought that this stickiness is going to last in consumer behavior. Once you've gotten things delivered, why do it any other way? You also saw today that McDonald's is planning to double down on that whole delivery and drive-through approach. For example, they're talking about testing a third drive-through lane that's express, that you can just pick up your digital order, never talk to anybody. And that drive-through lane will actually eat into how big the dining room is. So I feel like if they're making these changes, they think this is here for the long haul.
And I'm interested in, you cover, of course, a wealth of these sorts of companies. And today is a day where we focus on the vaccine, but we also focus on potentially new administration in the US and what that means for international companies like Starbucks that you look at in particular. Like, how much are these companies reorientating themselves at the moment and seeing new futures?
You mean reorienting themselves after the election?
Yeah.
Yeah, nobody wants to take a public stance, certainly, on they want to make sure that they're popular no matter who is in the White House. That said, we did talk to Patagonia today, and they, very big on climate change, and they're very excited about some things that, Biden may bring in here. We also cover the cannabis stocks, which, really skyrocketed under the prospect of a Biden presidency because there's a chance that it might be legalized federally. I think other than that, though, your Starbucks, I don't think you're going to see all that much change. I guess what it comes down to is how fast there is a vaccine and whether there are more permanent lockdowns in the United States.
Are they bracing for them?
Exactly. It would be a short-term pain, but I think the question is, is it worth taking your medicine now so that you can reopen your economies sooner and larger, down the road? I think that's really what everyone's trying to balance now.
Question marks being raised by, of course, Governor of New Jersey, Phil Murphy, just a moment ago, and Riley Moffett. Always great to get your take. And who knew? You're Taylor's boss as well. You learn something new every day. Let's have a quick look at the rest of the market because we're coming off our highs, and significantly, it's tech that underperforms. NASDAQ in the red by 17 points. The Country World Index still, though, at a record high. This is Bloomberg. Just about half an hour left in the trading day. This is Countdown to the Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Taylor Riggs. And like we've been talking about all day long, this is finally the rotation that we've been talking about a little bit, from growth to value, from big into small. And we get all of those moves with 28 minutes into the bell. If we flip the board and take a look at where we are on a sector level, of course, mostly in the red, discretionary, mostly in the green, I should say, discretionary in the red. But Romaine, it is really these cyclical sectors, energy, financials, things that benefit from higher rates, the real outperformers today as we start to begin again to talk about this rotation into some of the value, more cyclical sectors.
Yeah, and there are some individual stories out there. You take a look at Biogen. We talked about this on Friday, of course, that FDA panel are not recommending moving forward, of course, with that Alzheimer's drug treatment. The final decision will come by the FDA a little bit later in January, but those shares down as much as 28% at the moment, down as much as 30%. Beyond Meat has been on a wild ride today. The shares were down as much as 10%. Then they rose as much as 9%. This on speculation about whether Beyond Meat was involved in a new veggie burger that McDonald's is working on. The speculation was McDonald's went on its own. Beyond Meat later said that it did collaborate on that meat patty, veggie meat patty. Nevertheless, so the share is now pulling back down 3%. Adobe down, about 3.5% on news that it's in advanced discussions to acquire this software maker Workfront, privately held company, for about $1.5 billion. And at the top of your screen, you see Tilray. Those marijuana stocks continue to get a bid here. Caroline, Tilray up more than 65% over the past 3 sessions.
Extraordinary. Completely extraordinary. Also, what's kind of extraordinary is how well the riskiest companies are doing today. Today is a day where the credit risk is actually your friend. It seems those that are most likely to default, those companies in a Bloomberg basket, have really outperformed the market. They're up about 10% on the day. Now, sure, they are well underperforming if you go back from March. In the white line is basically your weak balance sheet kind of a company, Taylor. Your companies like the American Airlines of this world, the Boeings, the Carnivals, the Expedias, they've significantly underperformed. However, on a day like today, they are where your winning trade has been, up about 10%, whereas you're basically only up about 1 or 2% on those that have a better balance sheet in your orange line.
Caroline, I love that. I mean, we've been really talking about this idea of this risk on trade and really what this vaccine means, what a Joe Biden presidency may mean. There might be a Republican-controlled Senate. We don't have that just yet. But really, is that what investors are looking for? Let's get the perspective from one of the most celebrated private equity voices. For that, we go to David Rubenstein, and who also, of course, as we know, is the co-chairman, co-founder of the Carlyle Group. He's host of Peer-to-Peer Conversations on Bloomberg TV. Great to have you. Talk to us a little bit about what changed for you this morning. This was the news on this vaccine we've pretty much been waiting all year for. Does this change anything for you now going forward?
Well, I think that the election results, what you're talking about, the election results? Sorry.
Yeah, we can go right there. Both the vaccine and then, of course, the election
I'm sorry, the vaccine.
Results.
I'm sorry, I misunderstood you. Well, the vaccine results from Pfizer are quite encouraging, obviously. Have 90% success rate is quite high for a vaccine, certainly at this stage. So I think that's obviously propelled the markets forward. And I suspect that other companies that are coming forward with vaccines will have similarly high results. So that's very encouraging. But we have to recognize, without putting a damper on this very good news, that by the time you get the vaccines into the market and have them widely distributed, it's going to take several quarters. So I don't think that it's going to be in the first quarter that everybody will be vaccinated. And we have to overcome the concern that some people have about taking a vaccine for a variety of reasons. People don't like to take vaccines, or they've been worried about this particular vaccine. So the Pfizer news is great. I hope other companies that are working on it will also have similarly good news. And so I can understand why the markets were quite happy with this.
Markets also pretty happy with what's happening in terms of potential gridlock. Do you see it that way, David?
Yes. I do think that the markets, markets like several things. They like certainty, and we think we have certainty now, but they also don't like anybody to be so in control that something can be jammed through one part of the Congress or one part of the administration. So the fact that you're likely to have a Republican, not certain, but likely to have a Republican Senate, likely to have a slightly less Democratic House, and are likely to have a Democratic president gives the market some comfort that nothing will get done that is too precipitous. Now, if you're on the left side of the Democratic Party, you might not like that. If you're on the right side of the Republican Party, you might not like that. But the markets certainly seem to like that.
And so the one thing, though, that Biden and every president has here, David, they do have a certain regulatory power where they don't necessarily need to go to Congress to put in place what they may think are rules and regulations that they see as necessary. Are you concerned at all about the potential regulatory changes that a Biden presidency might bring, and whether that could have an effect here on what the markets are expecting?
Well, I think what we've learned in recent years is that whatever regulatory action a president takes is likely to be subject to some litigation. So it's very unlikely that President-elect Biden, assuming he is, sworn in, and as I expect he will be, that it's unlikely that he can do something so out of the expectations of norm that people will not sue. So I think that There will be litigation. So it's not as easy to just do executive orders and get things implemented. Though executive orders have become increasingly popular, as well as have signing statements with legislation, which often say the presidents aren't going to do exactly what the legislation says they're going to do. So there's no doubt that President-elect Biden will likely implement a number of things quite quickly. And I think they have a long list of things they want to do to reverse some of the things that President Trump did by executive order. So I suspect that's the world we're going to live in for quite some time.
I'm curious about how you're thinking about the fundraising environment with public equity markets, again, rallying today. There's a lot of concerns that maybe there are some opportunities in the private market, and it was shifting valuations to overinflating the private market. Where are we on public versus private market valuations now?
There's no doubt for the last couple of years that private valuations have been high compared to more traditional standards, and public markets have been pretty high, too. So people just have to get comfortable with the fact that buying things in the buyout world for 7, 8, and 9 times cash flow is probably a thing of the past for the foreseeable future. And people are paying lower double-digit cash flow numbers. And I suspect that is going to continue for some time. One of the reasons is you can borrow money for very little price. Interest rates are so low, so it makes it relatively inexpensive to borrow money and therefore a lot cheaper to pay slightly higher prices than you would normally want to pay. If interest rates were to go up again, that would be a different situation.
David, I'm interested in your international perspective right now in terms of, is the opportunity right here, right now in the US? Is it abroad, particularly if we've got a new world, a new order in terms of international relations from here on out, potentially?
Well, without doubt, the greatest place in the world to invest for private equity, and I think public equity, is the United States because the rule of law, transparency, quality of managers, quality exit opportunities, all the things that we know. But I think outside the United States, there's some terrific opportunities now in China. I think China is had a rebounding in its economy, and I think India is quite attractive as well. I think Europe is also very attractive because the Europeans have to deal with the virus as we do, but I do think there are a lot of very attractive opportunities in Europe as well, particularly in the technology sector, which has often been overlooked a bit in Europe. So I am pretty bullish on some of the opportunities as we go forward. I do think that the new regime in Washington, D.C. will be more favorable to investments than maybe people might have thought before. Because, again, no one part of either party is going to be able to dominate. And therefore, I do think you're going to get compromises. And I think markets generally will like that.
Well, then talk to us about, I guess, the leadership challenge here for Biden to sort of facilitate some of those compromises, assuming he is sworn in on January 20th. What exactly do you think, I guess, is sort of the secret here to navigate a political environment that, at least right now, still seems to be incredibly fractured?
Well, right now it looks a little fragile for sure, but I think as time goes forward, I think it'll be clear that the president-elect has a reservoir of goodwill in the Senate. He was there for almost 40 years and knows a lot of people are still there. He has a very good relationship with Mitch McConnell. So I think that will help him a great deal. I do think as well in the House of Representatives, he has some very good relationships because he's done a lot of work there over the years. So I do think he will get off to a reasonably strong start. I think his transition team has been planning for this for quite some time. And while they didn't obviously know the outcome of the election, I think they felt that they needed to be well prepared. Presidential transitions are very important these days. And it used to be that virtually nothing was done in the presidential transition. Even when John Kennedy was elected, virtually nothing was done before the election to plan for the transition. And the transition mostly consisted of President-elect Kennedy working out of his homes in Palm Beach and Washington, D.C. with no staff. Now we have legislation that allows each side to have staff, and the new team coming in is paid for by the federal government to some extent and has office space, and that'll get done, I think, in the near future.
Well, you wrote the book on how to lead, so we thank you for your perspective on the new leadership role that we see for President-elect Biden as it stands. Carlyle Group's David Rubenstein, great to have some time with you. You can catch David, of course, David Rubenstein's show, Peer-to-Peer Conversations, Wednesdays, 9 p.m., right here on Bloomberg. This is Bloomberg.
All right, welcome back to Bloomberg Markets to Close. Counting you down here with a little less than 15 minutes to go here. And it's been a pretty volatile day, a high volume day. In fact, you take a look at this next chart. You look at the A, B, and C tapes here in U.S. markets, total composite volume right now above 14 and a half, almost 15 billion shares swapping hands right now. This is going to be the heaviest volume that we've seen at least since September. And on a value basis right now, we've added about $713 billion to U.S. equity markets here. That's going to be the biggest jump in value that we've seen going back to June 26. Of course, keep an eye here on where the actual levels are. Of course, the S&P 500 right now barely clinging to its record high. The Russell 2000, guys, has actually given back its record high, at least for right now.
Well, we want to also talk about a little bit, Romaine, of what we're seeing within the S&P 500. I was reading a lot of notes this morning talking about 3,600 being the new 3,200 in terms of being sort of this new breakout range, this new level of support. Here inside the terminal, you had seen it briefly go above, of course, 3,600. We've lost that, Caroline. We're now down to a 3,585. These are the futures, so it's showing a 3,580. But that record high on the S&P previously was a 3,580. So we're right back down to holding on to previous record highs, but we are no longer at that key 3,600.
Also, what's been notable is the haven being sold off in a big way. We saw the yen really fall, but we saw gold really getting pummeled. In fact, we haven't seen this bad a day for gold since all the way back in August. Is it perhaps the fact that we're not thinking the US government stimulus will be so big? That's what Saxo Bank's thinking about. But is it just risk on mood, sell your havens? We're down 4.4. This is Bloomberg. This is Countdown to the Close and Caroline Hyde.
I'm Taylor Riggs.
I'm Romaine Bostick.
10 minutes to go. What volume, what highs we see across the board in terms of your small caps in the blue, in terms of your Dow Jones Industrials in the purple, in terms of your S&P 500. Sure, we're off of the earlier day highs. Nevertheless, we're currently up almost 2 percentage points in the S&P 500. 3,576 is where we trade. Volume up a whopping 124% versus your usual average. But the knowing and the key underperformer remain today. Big tech in the yellow, NASDAQ.
Yeah, and you talk about some of the sectors here. I mean, energy shares really on fire. The S&P 500 energy index up 15% here on the day. We talked about refiner Valero. Of course, that was our stock of the hour. Last hour, our drilling equipment company, National Oil Well, also helping to lead these gains up double-digit percentages. You see the KBW Regional Banking Index up 16% on the day. You want to know why? You take a look at your 10-year yield, and you get a 14 basis point bump up, and that'll give you a bump up there in those equity prices. Restaurants, an interesting move here than what we've been seeing in the restaurant space, of course, with the potential for that vaccine out there. You're seeing a lot of those big names move up. Cheesecake Factory up 20% on the day. Darden Restaurants, the owner of Olive Garden, 18. And to the flip side of this trade, this sort of reopening trade, keep in mind that these life sciences companies, a whole ecosystem was sort of built up around all of these companies that were testing us for COVID and providing us with sort of these testing things.
At great expense.
Yeah, at great expense. And so they're really selling off hard today. So you're talking about Quidel. That's actually one of your biggest losers on the day today. Hologic, QIAGEN, Abbott Labs, Danaher, all moving lower here on the day. So it'll be interesting to see how some of the beneficiaries of the COVID crisis may actually suffer should we finally get out of this tunnel.
Well, let's get right to it. For more analysis, we're joined by Susan Schmidt, head of U.S. equities at Aviva Investors. And it does seem like we got a little bit ahead of our skis. I mean, we're down 300 points from the record, the high that we had earlier on the Dow, and the S&P is now no longer in record territory. I am curious, this, of course, around the vaccine, news that we've been waiting all year for, and yet in the intermediate, nothing really changes. How are you thinking about equities at this moment?
Well, in the intermediate, nothing has really changed. But longer term, I think this confirms that there is a light at the end of the tunnel. And investors clearly reacting very positively towards this and recognizing that, they have businesses that they have really not liked all year. We have those deep value trades, essentially, and we've talked about the difference between value and growth. And we see investors going back into those industries now that they're certain for a future for them in 2021. And you're really seeing that correct. NASDAQ virtually unmoved today, and yet we have the Dow and the S&P both up strongly.
How sticky is that? How much do you think that this rotation trade will actually start to stick?
I think the market always overreacts initially. And so you're going to see the pendulum swing back and forth a little too far in each direction. Clearly today, strong day on optimism. And I think we saw a lot of volume in the market. But overall, I think we will see some reality. The next couple months, we still have some uncertainty. There's potentially a bumpy transition of power. We have rising coronavirus cases still right now. We don't know when that vaccine is going to be able to be launched and be widely available, which is important. But at the same time, we're past a lot of the politics and stimulus should be coming. And again, we do have a vaccine with 90% efficacy that it gives a lot of comfort to the market. So I think you're going to see, investors look both ways at this. I still think we see a lot of volatility into year end, but overall, this is a positive.
Yeah, I am curious, though, about some of the optimism surrounding, I guess, the makeup of Washington, the idea that with a split Congress and potentially, I guess, a Democratic White House, that it at least removes the risk of any sort of major legislation that would disrupt markets. But there's also sort of the flip side of that, is that if we do get to a point where the economy or anything sort of needs a significant action by Congress, or even just sort of the annual budgets that Congress can't seem to pass on time. Is there a sense here that that could come back and bite the markets? Should we not have any real cooperation in Washington?
I think the markets are looking at this and saying, split between the president and Congress, certainly the Senate, is usually a good thing because it means nothing can change that much. Remember that markets hate drastic change. So it looks like the business environment, at least in the foreseeable future for businesses, isn't really going to change. Any concerns over a big tax hike have now, I think, alleviated, and the market is really looking at long-term, what can we do? The Fed has been the backstop here. And so I think the market is assuming that Congress and the president will get it together and they'll find a way to work things out via discussion. But importantly, the Fed has signaled that they'll be here to backstop the economy, and that's going to continue.
All right, Susan Schmidt here, head of U.S. equities at Aviva Investors, counting us down to the close. She's sticking with us a little less than 5 minutes ago here, Taylor. We were setting up earlier this day for a record high on the Dow, record high on the S&P, record high on the Russell 2000. Doesn't look like that's going to happen.
No, and interesting as we take a look at uptick minus downtick, that too is falling. Remember, the intraday high was 2,049 in May of this year. That was the number of stocks rising minus the number of stocks falling. We are no longer getting that sort of highs as you see here. The good news, though, is the number of stocks that are falling is lessening. So there is less selling pressure, but the number of stocks rising is no longer as high as it once was. That's sort of one gauge that we can look at as we take a look at breadth. To the downside, we have to take a look at shares of Beyond Meat. It is my stock of the hour. We will hear from them after the bell in terms of earnings, but just take a look at some of the selling pressure that we're seeing today. We're off about 4%. Really interesting headlines coming out. McDonald's said that they have a new McPlant patty that's made exclusively for McDonald's. A lot of Beyond Meat investors got nervous because they thought that they were the supplier to McDonald's, but then we got some confusing headlines that it was co-created between McDonald's and Beyond Meat. So I think a lot of questions after the bell, of course, for Beyond Meat and their partnership with McDonald's going forward. Finally, let's flip up the bell. And Susan, I'd love to bring you in on this if we can, because it is all about the 10-year yield today. Take a look at this. We are now up on this terminal chart to 93 basis points. Big moves today, Susan, on the 10-year yield. And I am curious how you are thinking about that as it relates to equities. A higher discount rate does bring down the present value, but it also means that we're forecasting future growth. How do you think about that analysis?
I think growth wins out in this case, and this is a boost for future outlook on the economy. That's what we're seeing here. It's not unusual to see the 10-year go up. Spiking to this level is certainly quite a big move for it, but you're also seeing the small banks really respond. Suddenly we have slope back into the yield curve, and we have optimism about the economic growth ahead. So we're seeing small regional banks do exceptionally well. We're seeing this overall optimism on growth across the economy and across all business models. And so I think you're seeing that. And I don't think it's going to be a negative for business. I think this is very much a positive. And in this case, we want to see that 10-year go up. It means the investor level of confidence has really gone up as well.
Financials, your second best performer in terms of industries in the S&P 500, up 8% on the day. But what's up 14% on the day is energy. Susan, I mean, how is that going to be sustainable?
Well, it makes sense that energy would be the most today because energy was really impacted with concerns over global economy growth going forward. And so I can see this move and I understand the emotion behind it. I think that what we really have to do for all of these businesses is to see that growth deliver. And that's where we might see some tempering and again, volatility into year end because we are reacting to the news and bringing it all forward, really pulling that good news forward on our valuations right now. And so you have to remember that the market overall will still be looking out to 2021, 2022. I think they have a much firmer and more confident outlook for some of these industries like energy and like financials. But I do think we're going to continue to see rockiness there. You're going to get ups and downs because nothing here is going to be a smooth straight line to recovery.
Yeah, speaking of not a smooth straight line, let's talk about healthcare, particularly some of those managed healthcare names. We saw them rally a little bit last week and then sell off a little bit last week. They're up fractionally here on the day. I mean, what's the future there? How do you view this sector?
Managed healthcare is always a little bit dangerous because you have to figure out which way the sentiment is going to flow. It's forever hit by headlines especially when you have a policy change from the government or policy being talked about. So managed healthcare here, I think very tempered. Investors are looking at that, still trying to figure out how that goes, how that evolves going forward. But also, I think that's a sector that benefits when you have a difference between the parties in the administration. And there's something where, again, investors don't want to see big change. They don't like surprises. Having that split government tempers it in this case, and I think helps some stability in those stocks.
All right, speaking here with Susan Schmidt, head of U.S. equities at Aviva Investors. She's sticking with us as we get the closing bells here in New York. A great shot there of the New York Stock Exchange. DrinkWorks apparently ringing the bell there. And I guess a relatively wonderful day here for risk assets. But of course, that record-setting run that we were setting up for early in the day not materializing, 3550 on the S&P 500. That's coming in below its record high. That Dow Jones Industrial Average, 29,158 below its record high. And the Russell 2000, which at one point traded above its 2018 record high, now closing back below that. But again, still up on the day. Big tech not really participating.
Big
Caroline?
tech not participating. What also wasn't participating, I love this, is a GMM function. It takes you across asset classes, shows you what moved, what didn't, with color, of course. Color-coded is what's trading right now is already New Zealand futures up at 1.2%. Canada, S&P 500 up 1.2%. This was a global risk-on rally. Europe really outperformed. US came in strong afterwards. What sold off was your havens. I'm looking at a Forex market. Japanese yen, check that out, down almost 2 percentage points versus the US dollar. Swiss franc as well, another key haven trade that comes lower. The euro off by 0.5%. Money moving into European equity futures already, and money, the significant move that you saw in bonds was astounding. And I know, Tony, you're going to take it through us, but we saw in Finland, Ireland, Denmark, I mean Europe, the yield levels moving there up 10 basis points, and you saw similar action here in the United States.
Oh, yes, we did. And how much of this, of course, is due to big moves, of course, that we continue to see in the bond market. We're up 11 basis points on the 10-year to 93 basis points, up 12 basis points on the 30-year to a 172. Earlier, Romaine, we were up to a 96 on the 10-year, so we're off the highs a little bit, but you really do wonder if this is the new range bound or if we are always going to be capped below 1%.
All right, some breaking news here. The Federal Reserve out with its latest, this is the twice yearly financial stability report. Remember, this is a report that was written, of course, prior to today. The Fed warning that assets may have big declines if the virus isn't contained. The Fed also saying that delays in a vaccine could derail the economic recovery. The Fed also commenting on a wide variety of other issues, basically saying that the outlook right now is still uncertain, primarily because of the uncertainty regarding the COVID-19 pandemic. And of course, we should point out this report obviously written before the news earlier today about that Pfizer vaccine trial.
Yeah, certainly warning if assets may have big declines if the virus isn't contained. The hope now is that it might well be. Susan, push us forward to tomorrow, how you set yourself up in terms of equity trading, are we going to see profit taking? Where do we go from here?
I think day to day, you are going to have a little bit of a roller coaster ride as we go into year end, because you are going to see a lot of volatility and people are going to be anticipating news that could move the market one way or the other. The best way that we're positioned to go into it is really having a balanced portfolio. I think what you will see is continued investment into some of these more value perceived names, ones that haven't done as well thus far this year, who have been seen to be lagging behind because investors just couldn't determine where and when the growth would come from. And I think you'll continue to see those gain interest and gain investors' interest as they move forward, predicting the 2021-2022 earnings. So expect management teams to come out and start talking about this as we go into the final quarter of the year. Investors are going to be very interested in how management perceive the potential for a sudden change in their business outlook.
Susan, I am curious if there's any sense of what you're hearing, if good news is bad news, a vaccine is good news, but if that means that the Federal Reserve doesn't have our back no matter what, they don't keep rates at zero, they don't support my investment grade and my fallen angel bonds, that things could start to unwind just a little bit. Is there any of that concern?
I don't think so. And I give a lot of credit to Chairman Powell for messaging so consistently on that front as we've moved into this. Even though that report was written, prior to the announcement around the vaccine, what we heard there was there's still some uncertainty. There's still some ambiguity about this path forward. And I think even with the advent of a vaccine cited in that report, Romaine, you made a good point commenting on the COVID virus is still here. We don't know the way that vaccine will be rolled out. Certainly not everyone is going to get it at once. It is still going to impact the economy. And the Fed understands that this is a long time period and this is a prolonged process. I think Chairman Powell's done a very good job messaging that they're there. And so I don't hear any negatives about what the Fed will do now. I continue to think they will be very supportive.
Yeah, and as we heard just from the Fed in terms of its economic stability report that Romaine just broke down, them really saying that it's so important where we go in terms of the vaccine and wanting the assets may have big declines, but that's only if the virus isn't contained. Susan Schmidt, it's always great to have your voice, particularly on what a monumental day it was for the markets. Head of US equities setting us up for tomorrow at Eveva Investors. More to come, of course. We've got plenty of things crossing the markets in terms of, well, earnings still to come. We digest that Fed's move. Meanwhile, it's Bloomberg Markets are closed. Stick with us. This is Bloomberg. Let's get you a check on how the markets closed. Not at their record highs, but close. In fact, the global benchmark, the All-Country World Index, did close at a record high. The Russell 2000 did not close at a record high. Neither did the S&P 500, but it was up some 41 points. Dow Jones Industrial Average up 834. The key, the shining light in the market was really the bifurcation, technology, big tech, down by 1.5% if the Nasdaq has anything to show for it. Taylor.
Let's get a breakdown of everything that happened cross-asset. Bloomberg's Katie Greifeld joins us now. Katie, what are you looking at?
Well, like Caroline said, it is all about the rotation today. And you can see that very clearly in value stocks. The Russell 1000 Value Index closed over 5% higher today, and it outperformed the NASDAQ 100 Index by the most since 2002, as that tech-heavy, stay-at-home trade unraveled on the vaccine breakthrough. Now, part of the reason value did so well today is because bank stocks surged. The S&P Financials Index closed over 9% higher, and it was helped in a big way from a rise in Treasury yields. 10-year yields spiked today, up about 10 basis points on hopes that should the economy reopen, you would see growth and inflation follow. Now, that spike in Treasury yields was good news for bond bears. They pulled over $1.2 billion from TLT last week. That is the long-dated Treasury ETF, and that is the biggest outflow since March for this fund on a weekly basis. Now, that outflow likely had more to do with profit taking rather than vaccine hopes, given that that fund did rally last week. But their timing definitely looks good today as bonds sell off. Back to you, Romaine.
All right, Katie Greifeld there with that update. Of course, she was just talking about some of those bank stocks really having quite a day. The KBW Regional Bank Index and, of course, the headline BKX Index just up phenomenally today. Sonali Basak joining us right now. Sonali, you're on the phone, so you're big timing us today, I guess, instead of just coming into the office. Explain this move that we saw in bank stocks today.
Yeah, absolutely, Romaine. It's pretty remarkable because you're seeing regional banks up more than 20% compared with the Bank of America, which is the best of the big five, up more than 15%. So it's really people getting excited about life being breathed back into state and local governments, into regionals. That's really what's driving it here, along with what your guests have been talking about more excitement about the yield curve.
And if you look over at the S&P Financials Index, a lot of these rises come from not really banks. You have Lincoln National having the biggest one-day move. You have American Express up there, people excited about payment companies. And so this is not just about the big banks. And you have Jefferies over with a note talking about how a lot of even smaller regionals really being able to benefit from this life being breathed back into local government. So you have Signature Bank being recommended by Jefferies. You have Sterling Bancorp. That's a $5 billion and a $3 billion bank that are up 30% and 25% respectively, that are more local New York, more regional firms that can really benefit from not being hurt potentially as much by a plunge in commercial real estate and people not paying their rent.
Interesting. Notable the outperformance of the smaller banks. It's also notable the statements coming from some bank leaders today. I noticed that Brian Moynihan not holding back for any sort of theoretical move by President Trump to say that he has indeed perhaps going to hand over the presidency. Instead, Wall Street already saying, look, we're going to be working with the Joe Biden administration. What about the election overhang for the banking sector, as well as what we're seeing in terms of the vaccine hopes?
Caroline, it's really interesting here because if you look at the Democratic Party, there's a very wide range of feelings on how they want to regulate the big banking industry. And you hear a lot of conversation here among the big banks about working with the Biden administration. Joe Biden, known as the great equalizer, it's not just a matter of him working across the aisle with the Republicans. It's also, he mentions public-private partnership in a lot of his plans. So there's this hope among executives that they'll work with him as he builds these infrastructure plans, as he builds these small business plans. And might I mention, Leo Brainard, remember when it came to the most recent Fed actions, she was the big dissenter here. She was the one that said it was a mistake for the big banks to be paying dividends at this precarious time. She's the one today saying that, in this twice-yearly financial stability report, saying that there are still some big issues here that we really need to be thinking about when it comes to the banking system. And so if she is the Treasury Secretary, how hard will she come down on the banks, especially with such a wide range of views that are in the Democratic Party platform, which, by the way, also mentions reinstating some form of Glass-Steagall, right? So there is a wide range of views here, and it's a very big question mark as to how the next cabinet will address the banking system.
Thank you, as always, Bloomberg's Sonali Basak. It is not every day, you guys, that you have Bank of America, JP Morgan up 14%. Incredible moves today. We have seen the market reaction to the outcome of the U.S. election and, of course, the possible coronavirus vaccine today. New York Stock Exchange President Stacey Cunningham touched on both subjects earlier, telling Sonali Basak about what we may expect from the Biden administration, including the national response to the pandemic. She spoke from the online edition of the Conference of Paris this year. Take a listen.
2020 has been short of no surprises, and we've had lots of those to date. And I think we'll continue to see the election results, though, have come in. And that's something that we're seeing the market react to this morning prior to the news about the vaccine, which then really, it contributed to the major market moves to the upside. There's still some unknowns as we work through some of the details. But I think the big takeaway there was the market was reacting to the view that the election was resolved. And so that uncertainty and being able to move on is certainly a positive with respect to market reactions and having that clarity. So that has been well received by the market so far. I think the big story around our election here was the voter turnout, just seeing the number of people that voted in this election and how that's really eclipsed recent presidential election voter turnouts is a good story, certainly in the U.S.
What during this pandemic have you found yourself doing as the president of NYSE that you would not have done maybe in the past?
I think what we've been doing is we've been focusing on how to strengthen our community and give them the tools that they need to fight this unprecedented environment. So one of the things I wouldn't have expected I would have been doing in the past was holding a series of conference calls with our CEOs with people like former FDA Commissioner Dr. Scott Gottlieb, who's providing information about how to battle a pandemic and how to keep employees safe. And that information has certainly been really what's been most useful for many CEOs this year as they're figuring out what are the right steps to keep their employees in a safe environment. And so many of them have been asking the same questions. How are you handling the pandemic is a very common question to hear as you get on the phone with CEOs. So really thinking about those types of things, how they think about their workforces going forward, not just during the pandemic cycle, but just long term. This year really showed us a lot about the acceleration of digital transformation, about not just the digitization of processes that exist, but really how people are transforming their businesses with the importance that they had to put on remote work and all of the different elements that go into their day-to-day. So many of them are taking that information and considering, how does this redefine where they're going? And with every crisis, there's opportunity. And that's certainly a message that I hear, and we look at our own business. What do we learn from this, and how do we want to continue to evolve? Because we do have opportunity to learn from everything that occurs, whether or not it was welcome.
Well, let's talk about remote work for a second. You were also one of the first New York area companies to start to bring people back to work. And now we're sitting here today on a day where Joe Biden has already started to create a task force around this pandemic. What would you like to see out of a national response for COVID-19 as we get through what he called this dark winter?
I think it's really important to recognize that we've learned a lot about the virus over the past few months, and we've learned how to safely operate. So yes, there is real value in limiting the number of people that we bring together, but we can reduce the risk of transmission of the virus by the things that we've learned, like wearing a mask. So we reopened the New York Stock Exchange trading floor in May. We have over 400 people coming in each and every day. They're wearing masks, they're social distancing. We put a lot of precautions in place to keep people, to reduce the risk in the environment. And we haven't had any cases of transmission that we've seen on the trading floor. And that's because we believe that we've taken these precautions. And, we've had cases that we've screened that were attempting to come into the building. And so by using those measures, we've been able to reduce that risk. That's how we keep the economy open, is by thoughtfully bringing people together in a way where we're reducing risk. And I think it's really important that we do recognize that some businesses are going to struggle if we can't reopen the economy. There are ways to do it safely. So let's use what we've learned about the virus, use what we've studied, but find a way to focus our energy on the businesses that are most impacted. If there are people who are operating remotely without any loss of productivity or impact to the overall economy, let's let them stay remote for a while. I think we just need to use some common sense and risk reward evaluations as we think about which parts of the economy we want to prioritize, whether it be getting children back to school or businesses that might have trouble with withstanding long-term downturn.
All right, that was Stacey Cunningham there, of course, president of the New York Stock Exchange, speaking with us a little bit earlier. All right, let's get over now to the first word news with Taylor Riggs. Taylor?
Thank you, Romaine. And we'll start. Despite growing calls for President Trump to concede his loss in last week's election, the president does have Senate Majority Leader Mitch McConnell on his side. McConnell says Trump is within his right to request vote recounts and file legal challenges to address irregularities. The Kentucky Republican added that the election did appear to be free from, quote, meaningful foreign interference. The United States has reached another grim milestone. More than 10 million Americans have been diagnosed with COVID-19 in the past 10 months. And with colder weather on the way and people increasingly likely to spend more time cooped up inside, the virus shows few signs of slowing down. The U.S. accounts for roughly a fifth of the more than 50 million cases worldwide. And another member of the Trump administration has the coronavirus. Housing and Urban Development Secretary Ben Carson tested positive for COVID-19 this morning. Carson attended an election night party at the White House on Tuesday. Also at that event, White House Chief of Staff Mark Meadows, who tested positive the day after the party. And now Bloomberg has learned that David Bossie, an outside advisor to President Trump, who is leading his post-election fight over the vote counts, has also tested positive for COVID-19. And President-elect Joe Biden is outlining his plans for helping the nation beat the coronavirus once he takes office in January. He warned today that the country is facing, quote, dark winter and that bold action is needed.
I will spare no effort to turn this pandemic around once we're sworn in on January 20th. To get our kids back to school safely, our businesses growing, and our economy running at full speed again, and to get an approved vaccine manufactured and distributed as quickly as possible to as many Americans as possible.
Biden also urged all Americans to wear a mask to help stop the spread of the coronavirus. The president-elect has formed a task force composed largely of doctors and public health experts to help map out policies needed to stop the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg.
All right, big rally in equity markets, also a big rally in the oil space. Oil jumping the most since May on news, of course, about that potential COVID-19 vaccine breakthrough. For more, let's bring in Bloomberg's Jessica Summers. Jessica, big day here for crude oil, though we're still kind of stuck right around that $40 a barrel mark.
Thanks. Great to be with you. Yes, we did see quite an impressive rally in the oil market today. WTI jumping over 8%, and it was really a twofold event. We had the positive news around the development of a coronavirus vaccine, which in the oil space really boosted optimism that demand may rebound sooner than expected, of course. But it's also really important to point out that some of the largest oil trading houses are saying that this oil rally really caught the market short. So last week, for example, the combined net short of speculators and other investors in the Brent benchmark was at its biggest on record. So essentially, investors who'd been betting on lower prices were quickly covering their positions. So we saw a bit of a buying spree today, I'd have to say.
Talk to us beyond the headline prices right now. What are you being told in terms of curve being strengthened, for example?
That's a really great question, Caroline. You know, we've been looking at the different pockets of the oil market, including the oil curve, and we've been seeing strength across the board, which is a very good sign. Take, for example, the oil futures curve. I'm looking at the DC spread. I like to look at that spread. It's very telling. Brent for December 2021 gained the most relative to December 2022 since May. That's about 46 cents. And that's quite unusual on a normal trading day. Just to put that into perspective for you, those differentials only move by about a handful of cents. So this is a really good indication of how bullish investors are right now about the market's future. And that's what that oil curve is really telling us.
Part of that future, though, is the return of travel, personal travel, business travel, taking jets to, I don't know, Shanghai, California, you name it. Is that really going to be the real test of demand?
Yes, Taylor, you know, jet fuel has been quite an interesting area to watch within the broader energy markets. And because of the pandemic, like you pointed out, jet fuel has been so weak with that lull in air travel. But today, we also saw a bit of a pickup in that market. In Northwest Europe, just for example, jet fuel was trading at its biggest premium to diesel since March at about $11 a ton. So this also is on indications that a coronavirus vaccine is making good progress, which would help provide a boost to airlines if they're able to ramp up flying schedules, if the demand increases for personal travel, business travel. So the fact that this area of the jet fuel market strengthened is very, very telling.
And Jessica, so then what's next here? I mean, right now, I mean, we're looking at oil trying to break out of that range. You are seeing a little bit more activity, of course, in that in the finished fuel space with jet fuel, diesel, and of course gasoline. What are you watching now going forward?
Well, Romaine, what I'm really watching is when demand will actually return. There's a lot of conversation about this demand pickup, you know, impending demand rebound. But the timeline is, when will this actually happen, right? I mean, analysts are saying that the news today at least put some sort of a floor in the oil market and sort of pushed away those short sellers. And RBC says this is a step in the right direction. But the big question is, when will demand actually return? So we're sort of waiting for more clarification as to when that will actually happen. A lot of focus is also being put on OPEC producers and their allies, whether or not they're going to go through and hold back releasing more oil onto the market in January, or whether they'll just continue with production cuts, which would be very market supportive. So the next couple of months is going to be very telling in terms of when demand will actually rebound. Really positive news today, a lot of hope for the future in terms of demand, but now we need to look at the numbers to see if that actually plays out.
Jessica Summers, we want to thank you. All things oil and the big moves that we saw there today. We keep well. Now, a quick check on the latest business flash headlines for you right now. And the largest coal mining company in the U.S. is warning of potential bankruptcy, Peabody Energy, and it's unlikely to meet the terms of a credit agreement this quarter. According to a filing, Peabody says it may have to seek an in-court restructuring if it can't improve its financial situation. Coal production in the U.S. is expected to fall 26% this year. This week, video game prices are going up for the first time in about 15 years. Games such as Call of Duty and NBA 2, K21 will each cost $70. Am I saying them wrong? Sorry, I have no idea about games. The move coincides with the debut of new gaming consoles by Microsoft.
Wow.
Romaine, take it away.
Keep it up. Wow. It's like gamer. I guess you're not the gamer on this panel here.
I'm not.
Taylor, you got to be the gamer,
What should I
right?
say? What should I say?
I'm not a gamer, but we love Carolyn for those outtakes. So thank you.
Call
as
of Duty,
always.
I was proud of myself that I said that
Well,
right.
you got that one right.
Here's the good
What
news.
else do you need to know?
I'm done. Stay tuned. Caroline's going to keep laughing. So is Joe Weisenthal. He's next. This is Bloomberg.